Guys, welcome back to the CSA Forex channel. And today is the 14th of November. And yes, we have key data coming out today, 14th of November, Tuesday. And for the US dollar, by 2:30 p.m., we have the CPI, the Consumer Price Index, key data release for today. And if you don't know the CPI, it tends to be very volatile. It tends to bring in a lot of whipsaws, spread increments, slippages, and so on. So you need to be careful with this. And this is coming out in a few hours from now. Now, what I normally tell traders is if you do not have any directional bias whatsoever, the best thing to do is to stay out of the market. I repeat, the best thing to do is to stay out of the market. And we're going to look at what the dollar is painting now. I've already checked it, but I'm going to also show you guys what the dollar is showing us now. And we're going to cross over to our chart and look at the DXY, the USD index. And that's what we have right in front of us now. Now, if you look at it very well, we had this area here, as you can see, an area of support, resistance, and you can see in as much as it kept on, testing this area, it still acted as what? As resistance. So we had S here for support, S here for support, then we had R here for resistance, and then R here for resistance. So that means that obviously this is a flip zone. Now, because of the high impact news that we have coming out within a few hours from now, approximately about 6.5 hours thereabout, trust me, the candle formation that we might have, the build up to the news release, most likely will be sideways. But this is what I would like to see. I would like to see this lows taken out, right? Meaning that this low should be taken out and then maybe a quick pullback and then further drop all the way back to the lows over here from the 3rd of November. At least that is what I would like to see, because looking at this dollar index as well, something also caught my attention. If you're a Fibonacci retracement trader and then you pick your tool and you drop from the swing highs all the way to the swing lows over here, you'll notice something. You notice that this area that we called a flip zone confluences with the 50 Fibonacci retracement level, which is definitely a good one. And then those that might have taken it for the USD index, for the DXY, you have the stop loss just above. And then if it goes all the way, then that will be good reward at the end of the day based on the risk. Now, even if you're not trading the dollar index directly, because a lot of traders tend to just use the dollar to have a gauge of what is happening with respect to the other instruments, just like we have for the gold, Euro USD, and a few other major currency pairs. Because when it comes to correlation, some of them are higher than the others. Now, I'm going to clean this up and then we'll look at gold as an example, which is the next one. Don't forget, we're expecting the dollar index to drop some more. That means that the gold will do what? The gold would go in the opposite direction, which is up. And we did this video yesterday based on the gold, so you could watch the video, the previous video posted yesterday. We did this video based on gold, where we're expecting a breakout from here, and we have the breakout. We're actually expecting a pullback, which hasn't occurred, right? And then we're saying that it should push higher. So if the dollar index, the DXY, if it decides to drop some more, then expect the gold to rush up at least to this point over here, which is also a good one for fee retracement traders, drawing from the swing highs here all the way to the swing lows. So this could easily be a good one for entry to try to take it back down. But one thing you must also note, in as much as we're having this discussion like this, the CPI could easily be very volatile. It could be just one candle that could easily rush up, and then that candle gets smacked back down, and then you see it, rush back down as well. So a lot could happen during the CPI news, so you need to be careful. I repeat, you don't have any clue of what the directional bias is going to be. It's best to stay out. Because one thing also is, even if you use the stop loss, right? You use the stop loss, it's very possible that you could even lose more than the stop loss, which has to do with slippage. And if you go through the channel, the CSA First channel, we've already done a video on slippage that would explain all of that to you better, right? Great. So this is what we have for the gold. Now, apart from the gold, what about the Euro USD? You remember for USD index, we said we wanted to go down. That means that the Euro USD should be what? Should be up. Beautiful. So you can see that from what we have right in front of us, the market is already painting a story. Here is what? Resistance, resistance, support, 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 support. And then we're expecting it to push higher to this area here. Now, where it is for me is in no man's land. I'm not going to be buying over here because it's in the middle of nowhere. I'm not going to be buying here. And then, of course, I'm not going to be selling here. The best place to buy is at this point here. This is the best place to buy over here. And then the best place to sell is at this point over here. So you must always know your levels and then know what you want to do, either a buy or a sell. And of course, this will also determine whether you are a trend trader or a counter trend trader, right? So know how you are going to be approaching the market and then approach it the proper way according to you. And then whatever you are doing, whether trend trading or counter trend trading, always also ensure that you are using what? You are using proper risk management. You have your stop loss in place. Your proper risk management should be based on your volume lot size, which has to do with your account balance, right? Very key, very, very important. Now, with that said, we're going to be rounding up this video, give you time to digest it. And if you have any questions, feel free to ask. In conclusion, in summary, for me, I don't have any idea of what the CPI is going to hold. I don't have any trade this week. Last week was a good week, but this week I am on the sidelines for now because the market has not presented anything to me. Who knows? The CPI news might open up the market a bit more and then we might have better clarity. But I am not going to fight the market. I'm not going to do guesswork. I'm simply going to wait for the market to tip its hand, and then I'll just simply follow accordingly. So I want to say thank you guys. It has indeed been a good one. Do enjoy the rest of the day and ensure to trade safely. Cheers.